All right, good morning. Happy Tuesday. Welcome to Forex.Today, the YouTube community of more than 20,000.
Today, the YouTube community of
more than 20,000 foreign exchange traders. Yep. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Now, why would we do that? Well, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble. Focus on the long term and never risk money you cannot afford to lose. Yeah, all right, anyways. Let me get that out of the way. Let's move this around. Oh, no, let's skip that. Massive, well, I guess I got to do a thumbnail, don't I? Let's do a thumbnail. Hey, my name is Harry Potter. All right, there you go. All right, cool. So anyways, welcome to the live stream. Please vote. The first 30 votes get to dictate what we do today. I did not put euro because that's what we did yesterday. Very nice. All right, so before we get going, what I'd like to do is take you through all the resources that have been, gathered over the decades that I've been doing this. People are like, hey, what broker should I use, Wayne? So tradersway.com. Hey, Wayne, what tool should I use? What platform should I use? What training should I have? What live groups? Wayne, can you do a live group? Yes. Wayne, can you write a book? Yes. So, since I've been doing this for 20 years, all of these resources have slowly but surely been gathered. The links are in the description below today's video, so you can go to tradersway.com, open up a demo account, and see if they can earn your loyalty and respect like they earned mine. They're an ECN, so they don't trade against you. That's not how that works. Okay? Most brokers B-book you, trade against you, and that's how they make their money. When you lose, your broker wins. Well, Traders Way is different. So they actually need you to succeed. Their incentives are aligned with yours. I run an organization called Investor Bootcamp. It's $88 a year. I run an organization called TradePlans.ai. It's completely, totally for free. Cost me a Rolex. Cost you nothing. There's free lectures on trading stocks. There's free lectures on fundamental analysis. I wrote a book and sold the rights to Wiley Publishing. So it's one of the largest financial, or probably the largest financial publishing firm in the world. So it's as legit as you can get. But I sold the rights to the book. It's their book. But I wrote it, and it's an honest book. Okay? I run an organization called QuantBox. It's only $79 a month. And it'll radically change the way you trade. Okay? All right, so so you should check out QuantBox. You should check out Traders Way. You should check out Investor Bootcamp. Good. We need a few more votes before we jump into currencies, so I will just jump into some commodities. Okay, take a look at gold. Gold is going nowhere fast. Stayed inside our trend lines. Huh? Yep. I wouldn't expect gold to be a major market mover. Shouldn't be a market mover, I think. Okay, so it's just quickly doing nothing with a slight emphasis on not up, but really it's like nobody wants it. The market doesn't seem to want it to drop below 2,000. That's all. No big news out of that otherwise. Okay. You know. So this whole area for a bear is a sell zone. Okay, the whole area down here is a buy zone. And yeah, someone could have bought this recent touch right here. Yeah, yep, that could be some bulls. It wasn't a lot. You can see, obviously, right, if you remove this, there wasn't an overwhelming rally, but definitely buyable. But nobody really that interested. Retail traders want to talk about it all the time. Retail traders want to trade it every day. And it doesn't make any sense. So just be careful. All right. We had 30 votes there. We got our first 30 votes. Pound, followed by CAD. Okay, good. Let's zip into the pound. Yeah. All right. Pound Kiwi is done. Okay. What you learn at Investor Bootcamp is it's up and out. So after here, the pips become more and more unpredictable. Now, if you're a hoper, if you're a dreamer, you might be able to get this up to the next level, which is here. But that's not how you're supposed to be trading, just so you know. Now, if you have some sort of alpha that you say, okay, well, in January, this pair goes higher than that, because last month is a consolidating month. Okay, well, then you have some alpha. Then you can do it. But that's that. You should really either be just riding this 21 or you should have taken profit and gone on vacation. You should be sucking down $12 Coronas somewhere warm and beautiful. Okay, pound versus, was that Aussie or Kiwi? That was Aussie. All right, same thing on the first day of the month. This entry predicts this zone, so I'll draw it exactly the same way I did the Kiwi. Cool. Now you might be asking me, well, Wayne, I never trade pound Aussie. I never trade pound Kiwi. How would I know to be watching cross pairs? Well, QuantBox told you starting, I got to get my drawing tool. Starting right here, QuantBox went from bearish to bullish, and then around here went from bullish to very bullish. So it's your fault that you didn't know. That's it. It's knowable. It's just knowable information. That's all. It's knowable information. So anyways, now we're up near profit taking. Is it going to do the same as the Kiwi and go up to R3? Well, of course, I don't know that. But, this is the conservative target. This is the aggressive target. And up above us is the unexpected target. So now you have to make your decisions. conservative or aggressive. And, well, that's your alpha. That's your decision-making process. So for me, a lot of these trades are somewhat done. Like the pattern that needs to be fulfilled is there to there. So by and large, that's done. So what happens next? Well, you're supposed to be donating time at a nonprofit. You're supposed to be working at a food shelter or something. I worked at a food shelter, well, I guess it was last year, technically. Yeah, well, it was in 2023, I worked at a food shelter. Oh, I got, well, anyway, so, yeah, that's what you're supposed to be doing. Cool. So this could go up a little more, and then, right, let's say there's like likely and then not likely. So you're either out now, out later, or, living on a prayer. Living on a prayer. Yeah. Sorry, 80s crept in there. Sorry, 80s, warning, 80s. I actually used to listen to that album on a Walkman. Tape. On a Walkman, yeah. So anyways, careful, warning. All right, so let's get out of those. How about the kitty cat? Oh, yeah, a little different, huh? Let me check my phone. It's freaking out. Who's freaking me out? No, it's all right. Yeah, just pre-market stuff. All right. Cool. Okay, on a daily basis, quite flat, don't you think? Sometimes I do this exercise just to see confluence. Okay, all right. Where are the bulls? Where are the bears? Seems like most of the bears are here. And most of the bulls are, where would you say, here, I guess, huh? That's our current range, right? So we're not quite at the good price, huh? How do you use the price action pivot points? Well, they're by and large telling you slope and standard deviation. So in this case, this market is neutral. Done. How do you use them? Done. That's it. I look at it, it's neutral. Done. On this time frame, yeah. So you don't use them. They're not for like buy here, sell there. No indicator actually does that. If your guru is telling you that, fire your guru. But nonetheless, it's showing you the slope of the average price and the standard deviation of the standard price. Standard deviation is an easy calculation. Step one, you have to find the average price. That's supposed to be black, sorry. Okay, step one, you're supposed to find the average price. And then you measure the lowest low, the lowest low. You measure the highest high from this price range, a high, the high, the high, the high, the high. Okay, we call that variance. And then you have to standardize it looking at the distance from the lowest low to the mean, the highest high to the mean, this high and that high and that high and that high. And then you standardize it by taking the square root of the variance, and you get one standard deviation. And so there's a little more to this than that, okay? There's a little more to that, but it's the general idea. Because, you know, there's linear regression analysis in here as well as standard deviation. We don't need to get into all the differences. There are different maths doing kind of the same thing. And I'm trying to replicate pivot points. So how do pivots work? They look at the last period, okay, period. And they're going to look at the highest high, the lowest low, and the closing price, right? So this is the deviation, isn't it? This is a weighted average. And then from that, you can do some basic calculations. Based on this distance, you know, you can start doing things like, okay, well, you can figure out support and resistance, for example, and there's basic calculations for that. And then I use the M period, so M is equal to the difference between S and R. It's the midpoint. So when I was looking at the math of pivots, I'm like, well, if you're doing a standard deviation, and then what is this? It's weighted, right? It's sloped based on whether the central pivots are doing this or the central pivots are doing that. You're weighting them, which means you're either sloping them down or sloping them up. And you're standardizing the deviation by calculating the distance between the highest high and lowest low, and then using that calculation to figure out support and resistance. So you're standardizing, but based on what happened last period, yesterday, last week, last month. And I'm like, so now what I would do if I were measuring the price action, you have to have a starting point and an ending point. So there's your period, 55 candles, 200 candles, 21 candles. You can change your period and purposes, the same thing, but using a dynamic data set. Instead of what happened yesterday, what's happening every hour gets updated. If I'm measuring the last 55 hours, every hour updates the analysis instead of every day. So going back to how do you use them? Well, on the short term, there has been an uptrend. Okay, so the trend is up on this, just over this period. And this is unusually low for this period, and this is unusually high for this period. So if I was planning a breakout to the upside, remember, you don't do it because of the indicator. You do this because you've already made a decision, either on a higher time frame analysis or on your macro bias. But if I were going to buy a dip, then it's going to look like this. Because you could take this projection now and say this bottom will last forever, this top will last forever, which of course is not true. We just know that is what has happened, doesn't mean it'll continue. But we can analyze and use it as a guide and say, that's what you think the future is. And it helps in two ways. If you get it right, you buy the dip and you make money. If you get it wrong and it makes lower lows, you stop being a bull on this time frame and you take a walk. Bravissimo! Yeah. Yeah, damn, boy. Yeah, well, I made that indicator. Well, I didn't make it, but I designed it. Yeah. Hit them hard, hit them fast, huh? Hit them hard, hit them fast. Yeah. Drop the mouse. Yeah, anyways. And I'm done. I'm spent. Boom, shalaka-laka. Anyways. You're welcome. All right, so we did pound Aussie, pound CAD, pound Kiwi, pound Swissy. We'll get off weekly. But, well, no, let's stay on weekly. Okay? The high for 2024 is going to be somewhere between 115 and a half and 118. All you need to do is be a bull. And you're trading a double bottom. Okay? When is Switzerland going to raise interest rates? Never. When is Switzerland going to cut interest rates? Never. When is England going to cut interest rates? Not this year. When is all the other central banks, besides pound in Switzerland, besides the UK and Switzerland, what other central banks are going to cut? Everybody except Japan. So Japan's going to raise. The UK might actually raise. They could. I don't think they will, but they could. And Switzerland's neutral. So you could say, well, if pound relative to euro, relative to dollar, relative to CAD, relative to New Zealand, and relative to Australia. I suppose you could even put China in there and Korea and even some of the emerging markets. But let's just say versus these central banks, pound is more attractive. Not pretty, just the least ugly of the seven sisters. Or, yeah, I don't know, the one-eyed king in the Valley of the Blind. Isn't the UK doing bad in the economy? Yes. Terrible. Define bad on. And by the way, I cover this in excruciating detail when it comes to the swing trading group. So the day trading group and the swing trading group meets today. We do something called the Week on the Street, where we go through and we look at the economic data. We do it in excruciating detail. So you have to say, well, what components of the quote-unquote bad economy, so that you understand this. And then you might say, okay, GDP is 0. And inflation, I'll just make up a number, 5. I know that's not right, but okay. And under this situation, they can't cut. So this is why I said, and this is important, everybody, this is Forex. Okay, I want you to think about this. This is the whole point of Forex. I'm about to give you the secret. The UK economy sucks. So why is it strong? Europe is going to cut sometime this year. The Fed is going to cut. Bank of Canada is going to cut. Reserve Bank of New Zealand is going to cut. Reserve Bank of Australia, so on and so forth. These central banks are expected to cut later this year. Some sooner, some later. But this year they're expected to cut. And the UK may not be in a situation where they can. So, pound goes up. Okay? So stop using words on like good and bad. Isn't UK doing bad in economy? That's not a basis for making a relative investment. Forex is relative. It's not the pound directly. It's comparative analysis of option 1, option 2, option 3, option 4. So if the pound did nothing, pound Swissy would likely go up. Euro pound is likely to go up. Pound USD is likely to go up. Even if the pound stayed exactly the same. Euro pound up. Pound dollar up. Pound CAD up. Pound Kiwi up. Or whatever. If I'm flipping them, just flip them. But just understand, the pound is neutral, and these assets are likely to fall in value. You see? So, but like Richard's like, I'm long pound. Well, it's like, you're not really long pound if you're doing these trades. You're just short euro, short dollar, short CAD, short Kiwi, short Aussie. It has nothing to do with the pound. That's my point. The pound sucks. As On's point. The pound sucks. Pardon my French. What kind of idiot would want to own it? Well, you're actually selling euro. You're actually selling dollar. You're selling CAD. You're selling Kiwi. You're selling Aussie. And this stupid thing just happens to be the vehicle of which is relative. Because you're like, well, if my dollar's definitely going to lose value this year, I might as well hold in pound because at least the pound looks neutral to me. You don't like the pound. But you're like, well, the Bank of England's not likely to slash and burn interest rates, so that's my floating device. It's your treading water device. So yes, you're correct. The UK economy is a complete disaster. Yep. But that's not how you make a decision on Forex. It's all relative. Okay? Yeah. No, if the pound is stable, that's different than the economy. If the pound is stable because of monetary policy, because of the economy, then all the other assets that are likely to be unstable. So it's like de minimis. You want to reduce the weakest asset and move it up to neutral. So again, like the idea of the least ugly of the seven sisters. Okay? You're like, well, all the other ones are going to lose 3, 4, 5, 6% this year, and pound is likely to be stable. So 0 is better than -6. So 0 wins. But you're like, but it's a 0. The economy sucks. Yeah, well, it's slow growth with high inflation. So they can't cut interest rates, because then you're going to get 0 growth with higher and higher levels of inflation. So they can't cut. Shoot, there's plausible, it's unlikely, but it's possible they actually raise one more time like Japan's expected to. And well, now she's pretty. Okay, now the least ugly of the seven sisters is actually, half decently pretty. I don't know, but you see, like, okay, if they're going to raise, that's attractive. But right now, unattractive is better than ugly. Okay? Anyways. Yeah. Anywho. Will it last? Well, and we don't know how long that would last. All right, so let's move over to a pound dollar, pound yen, because I know you're interested. Okay. I want to count this. 1, 2, 3, 4. Oh, snap. Interesting. All right. All right. We don't want that. So we're doing pig dollar. Niet. Not interested. Pass. Isn't that nice? Yeah, done. That's it. Not interested. Pass. Any questions? Cool. Okay, notice so far no deviation month over month. Highest high, lowest low. Okay, take the distance from here to here. Okay, add them together, divided by 2, get the middle. Calculate the distance from here to here. Add them together, divide by 2, get the middle. And then go back and look at, well, what was the distance between here and here? And, okay, and then put that same distance here to here. You can't quite see it, but R2 is above. And then over here, calculate the distance from here to here. And then project that from here, and it's the same distance. And then calculate, okay, calculate that to that, okay, calculate that distance, add that price, and add that price, divide by 2, and you get the middle. Take this, right, and then that, add them together, divide by 2, and get the middle. So now you have the zone, the high zone, the low zone, okay, the average, and then the, right? So when I do price action pivot points, it's kind of doing, it's trying to do the same with different maths. Okay? So I just had to understand the math of a pivot point and then say, okay, how do I do that with price action? And it turned out a combination of standard deviation and linear regression. And then you could project that out. Yeah. So it's just me thinking about the tools. And I do that. I've really, honestly, spent time measuring stochastics and RSI and MACD to really understand exactly what they're trying to do and what their math is actually telling you by what it's measuring. It's cool. Therefore, you get a better understanding right? Than just saying, MACD told me up. No, it didn't. That's not how MACD actually works. MACD, no, it didn't. No, it did not. Okay, cool. So anyways, it took me 1 second. Not interested in pound. You can have it. Good luck. Adios. And then let's look at pound yen. Okay. All right, beast. Okay, cool. Let's go to a 4-hour. On the first day of January, pound yen said to me, buy 179 and go to 188 and then take profit. And we're done. Oh, but now, Wayne, now put me into a trade. What, dude? What do you mean? Now, it's done. It's done. If you can't do that, you can't do the other one. I mean, that's it. Okay? Done. Oh, Wayne, I don't trade triple bottoms. Okay? This is the monthly M2. It projects monthly M4. That's in my book. It's in the training course. It looks like resistance to me. But Wayne, it might go higher. Well, good for you. We call this the low-hanging fruit. And would you call that an uptrend, a downtrend, or a sideways trend? Okay? So, then you make a decision on what you do next based on how you answered that. Done. Okay? So most of these pound trades have done what is expected. You guys wanted to talk about it today. Pound, Kiwi, and Aussie seem to have outperformed, but it's also because Aussie and Kiwi are weaker. That's it. I confirmed that we're at target, but you should look at that and say maybe shouldn't have been interested in the pound. That was a week ago, 2 weeks ago, 3 weeks ago. So now what? Well, yeah. Well, maybe now you should be looking for the next new thing. Okay? Or be careful in trading those. Okay? Or you should realize that you're buying something that's expensive. It's like real estate. Okay? The person that buys the property always paid more than everybody else. So you're always buying expensive. And you need that real estate to go up even higher so you can sell it to some other idiot to pay too much. Right? So buying high to sell higher is a different gig or a different game. It's a different risk. So you got you either already made all the easy pips or you missed all the easy pips. And now you're getting in the game with the most amount of risk, but at least they are trending. But what I want you to recognize, if you decide you want to keep trading pound yen, pound dollar, pound Aussie, pound Kiwi, pound CAD, pound Swissy, if you're going to make the trade, just recognize the market conditions you're in so that you can set the proper expectations. Proper expectations for stops, proper expectations for lot size, proper expectations for limit orders, and you're making an informed decision. Even if it's trading in riskier conditions, at least you know they're riskier conditions. And at least you're trading something that had been trending. It's better than trading something just out of random, because you always trade Euro USD. Really? That's your alpha? Habitual mediocrity is not alpha. So in this case, you're like, well, dude, Wayne, pound Kiwi is just on fire. Yes, it's elevated, but you have a strong currency versus a weak currency. Good, just realize that you're at elevated levels. That many of the traders will be taking profit because we have hit those logical areas. And you should just be aware of, you're going to have a tougher time attracting new capital. And along the way up, you're going to lose capital. There still might be more bulls and bears, but it might be going up and it's every few hours a little less bullish, a little less bullish, a little less bullish. And if you get to R3, for crying out loud, take that as serious opportunity to get out. Okay? Boom. That was the pound. Hardly anybody clicked the thumbs up button. Thank you to everybody from yesterday leaving comments. We did have quite a few people leave comments. I appreciate that, because most did not, but for those that took the time, took the 30 seconds to leave a comment, I appreciate that. Thank you. What you do is good. What we do is good. All right, so almost half the people have clicked thumbs up. Almost half. Cool. So I apologize to the other half. I'm sorry. I'll try better tomorrow. I must be tired. So for everybody a part of Investor Bootcamp, we have the swing trading group and the day trading group meet today. And we are going to go through all the economic reports of the last 7 trading days that are, or I should say 7 calendar days, that are important. Okay? We're going to download the actual reports and actually read the reports. And you and I together will do the work that you should be doing. If you consider yourself someone that wants to become a great trader, if you consider yourself someone that wants to become a professional trader, if you consider yourself someone that wants to manage money someday, which means you have to raise money, this is the work that you're supposed to be doing. Now, my attitude when I was young as a trader was that reading the report was the one thing, and I literally wrote all this out. If you read my book, I created what I called the perfect trader to be my mentor, because I didn't know any Forex traders. There were no retail Forex traders. So I asked myself, if I had met the perfect Forex trader, what would they be like? What kind of characteristics would they have? And one of the things I put down is they would read the economic reports themselves and be informed, because they're the decision maker. And then I asked myself, of the 5% of retail traders back then that succeeded and 95% lost, would the 5% have that characteristic? And I would say there's a 61.8% chance the 5% of the top 5% would do that, right? Anyway, so the answer is yes. I think a successful trader would be the one that did that. So I just simply did it so that I could be doing the things that I thought would lead to the success. And a lot of it had to do with the 95% of failing traders would be the ones that would never read the report. You see? So I'm like, One thing I believe, in my belief system back then, 23 years ago when I was learning Forex, I'm like, there's two decisions. Reading the report might make me successful, but is really something that I believe a successful person would do. Even if it didn't quite lead them to success, it was just part of the habitual behavior of success. So that if I'm raising money, at least I can talk about the reports and I understand what's going on. I don't listen to the news for information. I don't read the newspaper for information. I already know the information, okay? So I'm like, that just seems like a prereq for success. And then I thought about, well, the other 95% don't do it, for sure. I believe that. So I'm like, well, just the act of doing what the 95% is unwilling to do? Well, that's definitely what I want to do the opposite of them. So just part of it was do the opposite of all the failures. Will it make me a success? Not guaranteed, but it's a start. And then you think about, well, the successful ones, do they actually know the data? Yeah, I think so. Actually, now that I think about it, yeah, I believe so. So I back then, I didn't have an economics degree, right? So anyway, so I would look at it and say, I don't know what any of this is, but my job is to read it. So I'll start there. I'll write down questions. What is GDP? What is CPI? What is PPI? What is PCE? What is the difference between CPI, PPI, PCE? Okay? What is the importance of retail sales? I had to teach myself all of this, everything, every single aspect of what I teach you, I had to teach myself, and it took me the hard way because there were no gurus. And I was uneducated. I didn't know anything about technical analysis, nothing about fundamental analysis. I learned a lot about trader psychology the hard way. So thank you for being in my life.